Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 6th of September. All right, now looking across the screens, this is one that really confronts new traders. The dollar firm on growth worries, right? So we've had a bunch of data out of Europe, out of the UK, and out of China, which was all a little bit weaker than expected, right? And what that creates is massive, as far as the media are concerned, global growth concerns, and the US dollar rallies as a safe haven, right? So sometimes hard for new traders to get their head around that, but that's the way it works. Here's the Chinese data. The key one was a little bit of a surprise, and this may be a lead into the Bank of Canada later today, if I can just get that up as well. The RBA, right? They're a little bit crafty, right? It all comes down to the way they say things, right? The consensus was unchanged. It came out unchanged, but we did see a significant breakdown in the currency, and that's because the RBA commented with recent data is in line with inflation returning back to 2 to 3%, which means basically they are on hold, right? They've done their job. The numbers are coming off, and it's in play. So that's like an interest rate cut. Okay, that's the impact it has. So when you're looking at today's Bank of Canada interest rate decision, same profile, right? They are expecting no change. So just be careful. If they do sort of reiterate something along the lines of the RBA, you will see Canadian dollar fall and dollar CAD obviously rally, right? And that goes in line with what the dollar's doing as well. So you may get a really big trade to the top side in dollar CAD if the Bank of Canada does come out and sort of talk along the same sort of lines as the RBA. All right, now outside of that, let's just have a look what else is coming out. Just keep an eye on, there are things moving the currencies at the moment, right? Pretty much all the data. So UK construction PMI data, European retail sales. You got a few other bits and pieces here coming out, but really, for my liking, the Bank of Canada interest rate decision, the statement, that's where the movement's going to occur, right? There's I can't see a surprise change in rates in Canada. So you've got to get the Bank of Canada website up and check out the statement. That's the key to it, right? So the ISM services PMI, or non-manufacturing data, this is a key number there as well for the dollar. We get some strength here. It's going to support the recent moves that we've been seeing across the board. Now, if I just go across to the currencies, right, this is just looking at the daily charts, right? Yesterday's data, or this week's data, right? Like you look at last week where we had non-farm payrolls and things were moving around quite a lot. It didn't really confirm the trends, but the data this week, the second, third tier data has, right? The dollar is going up, and it's going up against everything. Okay, so you're seeing a nice strong move across the board, and supporting that is weak euro data, and supporting the move down in sterling is weak sterling data. The Aussie, the RBA are saying their job's done. So the interest rate hiking cycle is over. So that's lower as well, and that drags the Kiwi down. So we have not just US numbers working for direction here, we have other currencies working in the opposite direction, and that's where you see a bigger move across the board, right? Now, if I come into the hourly charts, obviously it's a bit easier in hindsight, but looking at the levels where to get into these things is your sort of job from this point on. Obviously, dollar yen, it's sort of not on high alert yet. As I said, I reckon it's up towards 150 before the Bank of Japan gets involved. But there is a potential chance for a kick on here in dollar CAD. Once again, if the Bank of Canada talk about, you know what, the recent hikes have really stopped things and everything's moving the way they want. Euro is finally sort of nosediving, right? And that could really continue, right? Sterling, well, it's moved down on some weaker data, but nothing like the clean out we saw under 108 in euro. And the Aussie, well, this is the big clean out, sort of almost confirmation from the central bank that the interest rate hiking cycle is over, right? And just with close proximity, the Kiwi is doing the exact same thing. Now, on top of that, the Aussie and Kiwi, well, they're a little bit lower on the weaker growth scenario in China as well, right? So there's multiple things all lining up to give us potential strong moves. So what it does when it comes back to the numbers, because the instruments are now moving, right, it makes these upcoming sort of second, third tier numbers almost tradable events, right? If they are with the direction, you're going to see a more consistent move. Okay, factory orders out of Germany, the construction PMI out of the UK, retail sales for Eurozone, and then keep an eye on the, well, actually two things there. Let me just clear that up. The Bank of Canada interest rate decision and the ISM services PMI, all the non-manufacturing numbers, right? So these things come out at the same time. So it's a little bit tricky. The services data are much easier to work out, whereas you are going to have to go in and check out the statement for the Bank of Canada statement, right? So that's where we are. We've got pretty good active markets. The trends are starting to really kick in. If we start to see weaker German or European and UK and Chinese numbers, we're going to get the same continued move, which is a dollar rally, right? Just on global growth concerns. So you see the dollar rally on global growth concerns, and then also on strong numbers. It's a double whammy. You're going to get a more consistent move, and that's what we've been looking for. All right, guys, that's it from me. All the best. Good luck. Cheerio.